David Enrich, Dark Towers, Deutsche Bank, Donald Trump, and an epic trail of destruction. When the titan of the railway business, Henry Villard, defaulted on his loans in 1883, his chief financier, Deutsche Bank, would break business norms to stay on good terms with him. And Dark Towers, Deutsche Bank, Donald Trump, and an epic trail of destruction, David Enrich delves deep into the sordid history of Deutsche Bank. From supporting the Nazi regime to becoming the largest bank in the world in 2007, Deutsche Bank has seen many cycles of corruption and crisis. Discover how the bank's troubled dealings extended to risky ventures and clients, including the controversial real estate mogul Donald Trump, and how their quest for profit led to their undoing.
Banking on risky ventures. In its early days, Deutsche Bank made its name by collaborating with high-risk individuals and engaging with questionable institutions. The German Banks Association with the unscrupulous businessman Henry Villard laid the foundation for the bank's ascent into global prominence, where risk-taking became its hallmark. Throughout its history, Deutsche Bank has supported controversial causes, such as serving as chief financier for the Nazi regime and constructing Auschwitz. Despite devastating setbacks, Deutsche Bank found a way to bounce back, becoming a dominant force in the world of finance. In 1883, German immigrant and railway magnate Henry Villard welcomed a train of distinguished guests to Gold Creek, Montana, to celebrate the completion of the Transcontinental Railroad. Among those present was German banker George von Siemens, whose bank, Deutsche, had financed the project. However, Villard's business soon crumbled, defaulting on its loans and leaving investors like Deutsche to suffer the losses. Unapologetic and unashamed, Villard maintained a close friendship with Siemens, who entrusted him with scouting investment opportunities for Deutsche Bank. And so, Deutsche Bank dipped its toes into the risky world of American railroad financing, with Villard leading the way. While initially thriving, Villard's company predictably faltered again, forcing him to evade responsibility for another round of monumental losses. However, Deutsche Bank kept growing, thanks to European industrialization, becoming the sixth largest bank in the world by 1913. The bank's propensity for risk took a dark turn as Adolf Hitler rose to power in 1933, and Deutsche adopted the role of the Nazi regime's chief financier. The bank oversaw horrendous transactions, such as converting gold stolen from Holocaust victims, including dental fillings, into cash. Additionally, Deutsche funded the construction of the infamous Auschwitz concentration camp and the factory producing Zyklon B, the lethal gas used in the camp's death chambers. After World War II, the bank's headquarters in ruined Berlin fell into British hands. To ensure the post-war recovery of Germany's economy, Britain needed a strong German bank to thrive. Consequently, the Brits treated Hermann Abs, Deutsche Bank's wartime director and convicted war criminal, leniently, allowing him to return to the bank's helm by 1956. By 1970, Deutsche Bank had fully embraced its German identity, constructing two imposing towers in Frankfurt and investing in the nation's leading companies. However, the coming years would bring significant transformations to the bank and its risky ventures. Deutsche's risky reinvention. In an ambitious move to modernize Deutsche, Alfred Herrhausen acquired the British investment bank Morgan Grenfell in 1989 for $1.5 billion, stepping towards the Anglo-American banking model. Following this shift, Deutsche embraced the world of derivatives trading and hired a team of daring American traders led by Edson Mitchell to further align the company with Wall Street culture. While their expertise in the emerging market of derivatives was initially profitable, the change in company culture came with risks as many traditional conservative values were replaced by a sole focus on individual profit-making, potentially leading to disaster. It was 1987 when Alfred Herrhausen took charge of Deutsche, drawing inspiration from financial revolutions in the United States and the United Kingdom. In 1989, he oversaw Deutsche's acquisition of the British investment bank Morgan Grenfell for $1.5 billion, marking the largest ever such acquisition. Continuing the shift towards emulating Anglo-American banking, Deutsche leadership enlisted a group of daring American traders who specialized in derivatives, a new and risky financial innovation. One of these traders, Edson Mitchell, had humble beginnings managing the accounts at a small egg farm in Maine. However, he rose to become a respected figure on Wall Street, known for his relentless work ethic and camaraderie with fellow trader Bill Broeksmit. Both men gained in-depth knowledge about the derivatives market during their time at Merrill Lynch in Chicago. At the time, derivatives were hailed as transformative, beneficial financial tools comparable to ATMs or 30-year mortgages. This optimism notwithstanding, many Wall Street banks, including Deutsche, began using derivatives for speculative purposes, essentially gambling that could yield enormous profits. Under Mitchell's guidance, Deutsche established itself in London's financial market, arming itself with a $2 billion budget. Mitchell enticed his former Merrill Lynch compatriots to join him, doubling Deutsche's workforce in a mere 18 months and extending a lucrative salary offer to longtime friend Broeksmit. As the American traders, fondly dubbed financial gunslingers, meshed with Deutsche's corporate culture, a striking transformation took place. Deutsche's conservative, consensus-driven approach to decision-making was replaced by the brash, risk-taking proclivities of Wall Street's typical high-stakes players. With this transition also came a shift in focus, narrowed down to the pursuit of individual profit maximization. A desire for profit is natural and acceptable within firms, as long as the organization keeps all employees striving towards a unified goal. However, Deutsche's adoption of contemporary Wall Street values eliminated its unifying objective, potentially setting the stage for disaster in the future. The dark side of Deutsche Bank. Broeksmit retired from Deutsche in 2000, worn down by the shifting culture following the acquisition of Bankers Trust. The purchase was driven by the need to build a competitive Wall Street investment business but came with concerns about the bank's integrity. After the acquisition, Deutsche's investment banking arm brought in 85% of the bank's profits, and the bank began supporting riskier projects, including Donald Trump's real estate deals. As the mid-1990s witnessed Trump defaulting on loans worth millions, Deutsche trader Mike Offit entrusted him with a loan of $125 million, followed by another $300 million. Trump remained a client after Offit's dismissal, serviced by his protege Justin Kennedy. When Edson Mitchell, head of the investment bank, died in 2000, his successor Angshu Jain pushed Deutsche further into unethical dealings. In 2001, when the U.S. Securities and Exchange Commission began investigating Deutsche, the bank managed to recruit the lead investigator, leading to the case being dropped. Profits over ethics. Joe Ackerman, Deutsche Bank's first-ever CEO, was known for his unwavering focus on profits, often disregarding other aspects such as infrastructure and ethics. During his tenure, he prioritized shareholder returns, leading to the selling of ownership stakes in several German companies. He emphasized the importance of return on equity, adjusting compensation systems to reflect the new profit-driven reality, and as a result, some traders earned massive annual bonuses. This pursuit of profit entangled the bank in controversial practices, such as funding regimes under economic sanctions and engaging with legally dubious clients. All the while, Deutsche Bank's technology infrastructure crumbled, hindering the institution's understanding and management of ongoing operations, and Ackerman did little to address these issues due to the costs involved. The Trump-Deutsche Connection. The relationship between Deutsche Bank and Donald Trump was built on a desire for growth and name recognition. Despite Trump's history of defaults and exaggerations of his net worth, Deutsche Bank continued to lend him vast sums of money. Their partnership provided mutually beneficial outcomes like publicity and advantageous rates. However, this working relationship took a sour turn during the financial crisis when Trump refused to repay his debts and sued Deutsche Bank, causing the bank to distance itself from him temporarily. Deutsche Bank was known for its work-with-anyone approach, which led them to engage with Donald Trump, the brash New York real estate celebrity. Justin Kennedy, Trump's point person at Deutsche Bank, facilitated large loans for his real estate endeavors, despite Trump's history of burning other banks. While Trump was perceived as a bad investment due to his history of defaults and taunts about not repaying loans, he made up for it with his showmanship. Deutsche Bank's bankers were promised a weekend at Mar-a-Lago, his Florida golf club, if they could successfully fundraise for his struggling Trump hotel and casino resorts. This campaign sold $485 million in junk bonds, resulting in painful losses for investors when Trump filed for bankruptcy the following year. Meanwhile, Trump continued to work with other divisions of Deutsche Bank. He obtained a $640 million loan to build a luxury tower in Chicago, after using his private jet, gifts, and compliments to sway the bank. The deal was finalized, despite Deutsche Bank's discovery that Trump's net worth was significantly lower than he claimed. This dynamic between Trump and Deutsche Bank proved to be beneficial for both parties. Trump received low interest rates from the bank, while Deutsche Bank gained name recognition in the United States through its association with the high-profile business magnate. However, their relationship came to a screeching halt during the 2008 financial crisis. At the height of the crisis, Trump owed Deutsche Bank $334 million, but refused to pay it back. His lawyers invoked the force majeure clause, which typically applies to natural disasters, and argued that the economic turmoil was an act of God, thus nullifying the contract. To escalate matters, Trump sued Deutsche Bank for predatory lending practices and demanded $3 billion in damages. Stunned by these actions, Deutsche Bank finally decided to distance itself from the controversial businessman, at least temporarily. This tumultuous relationship serves as a clear example of the high-stakes world of financial partnerships and the potential consequences of pursuing business growth at any cost. Survival through luck and deceit. Angshu Jain and Joe Ackerman were more interested in making money than developing professional relationships. Their fixation on generating profits, combined with their shared cutthroat approach and lack of leadership, allowed Deutsche Bank to thrive during the Great Recession. The bank's enormous borrowing capacity and foresight to shed riskiest positions in the U.S. housing market protected it from remarkable losses. However, this was only possible through deception and manipulation of its financial records, hiding the reality of its toxic assets from public view. Angshu Jain and Joe Ackerman, two executives driven by their hunger for financial success and little else, found themselves steering Deutsche Bank through the challenging period of the Great Recession. Despite the love-hate relationship between the two, both possessed a relentless focus on generating profits. During the pre-recession era, with interest rates near zero, banks, including Deutsche Bank, had the opportunity to borrow massive sums of money at little cost. By investing in assets with greater returns than the interest they paid, Deutsche Bank significantly expanded its balance sheet, reaching a staggering 50-to-1 borrowed-to-capital ratio, much higher than most of its peers. This aggressive growth catapulted Deutsche Bank into the position of the world's largest bank in 2007, with $2 trillion in assets, equivalent to the entire German economy. However, it wasn't endless expansion that saved Deutsche Bank during the imminent economic crisis. Sensing impending turbulence, Jain nervously instructed his teams to offload their riskiest investments in the U.S. housing market, ultimately preserving the bank's stability. By bringing Bill Broeksmit, a retired executive, back into the mix, Deutsche Bank gained the expertise it needed to further navigate the uncertainty. Incredibly, Deutsche Bank appeared to profit during the recession. But the truth was clouded by deceitful practices. The bank's traders manipulated its financials to mask the fact that they held vast quantities of toxic derivatives, concealing billions of dollars in losses. This artificially constructed facade of success was instrumental in allowing Deutsche Bank to weather the storm of the Great Recession. While luck and subterfuge played a crucial role in Deutsche Bank's survival, the consequences of hiding such a substantial amount of toxic assets could not be avoided forever. The ultimate test would be facing the inevitable fallout from their unscrupulous actions. The isolation of Bill Broeksmit. As regulators caught up with Deutsche Bank's wrongdoings, Bill Broeksmit, a key figure in the bank's management, increasingly struggled with the immoral practices and lack of control. Despite his efforts to right the course, Broeksmit faced alienation and felt cornered. Tragically, he took his life in January 2014. Over time, regulators began to scrutinize the dishonest activities taking place within Deutsche Bank. In just 8 months of 2013, Deutsche received an astounding 5,777 requests for information. A British investigator exposed a tax fraud case involving the bank, which had robbed both German and British governments out of nearly $250 million. Regulators changed their approach, seeking more severe consequences for banks by imposing fines in the billions. Bill Broeksmit, a significant figure in Deutsche's investment arm, continuously attempted to halt the numerous unethical practices that plagued the institution, ranging from blatant to subtle criminal activities. Regrettably, his efforts were often brushed aside or met with ridicule. The relationship between Broeksmit and Edson Mitchell, a close friend and collaborator with whom he had built Deutsche's investment arm, disintegrated as their once successful partnership turned into the source of the bank's problems. In several instances, Broeksmit found himself at odds with his colleagues, such as confronting Troy Dixon, a risk-taking New York trader. This confrontation led to mockery from Dixon's team and a staggering $541 million loss for Deutsche Bank, along with regulatory red flags. Adding insult to injury, German regulators blocked 2 of Broeksmit's promotions in 2012 due to political reasons. Instead, he was assigned to the board of a Deutsche subsidiary in the U.S. which was notorious for complex and problematic deals, including loans to Donald Trump. Broeksmit was dismayed by the conditions he discovered there, characterized by outdated technology and indifferent traders unconcerned about regulatory scrutiny. He had the daunting task of resolving this seemingly insurmountable chaos. To make matters worse, U.S. and British regulators targeted Broeksmit as the central subject of an investigation. With mounting pressure from regulators and the disillusionment in the company he once cherished, Bill Broeksmit was found dead in January 2014, having taken his own life using his dog's leash. He left behind suicide notes addressed to his family in Ungshu Jane, a senior Deutsche Bank executive, highlighting his struggles in trying to rectify the very institution he once helped establish. The reckoning within Deutsche Bank. The loss of key figure Broeksmit in a daunting number of legal actions and fines hurt Deutsche Bank's credibility, causing the stock price to plummet and leaders to resign. The issues didn't stop there, with derivatives rendering vast assets worthless following the 2008 crash and even larger fines imposed, such as a $7 billion penalty by Obama's Justice Department for defrauding investors. By 2018, drastic restructuring was vital, leading to a new CEO and workforce cuts. Deutsche Bank finally caused a stir among U.S. investors, only to face continued scandals such as money laundering activities in their Moscow branch and a controversial relationship with Donald Trump. Reeling from the loss of key player Broeksmit, Deutsche Bank executives, including Jane, faced hard choices about the institution's future. Regulatory troubles and declining stock prices left the bank in an unprecedented position, as thousands of legal actions and looming fines in the billions weighed heavily on Deutsche. A striking $2.5 billion fine was handed down. In a shocking display, Jane avoided discussing the situation with the board and eventually resigned in 2015. His departure signaled the beginning of a new era, in which Deutsche Bank faced much-needed restructuring and accountability. However, Deutsche Bank's precarious condition persisted even after Jane's exit. The financial sector realized that the bank's assets comprised billions of dollars in worthless derivatives following the market crash of 2008. As investor confidence plummeted, so did the bank's stock value. In 2015, the Barack Obama-led Justice Department imposed a staggering $7 billion penalty on Deutsche Bank for defrauding investors, the largest such fine against any bank. It was time for sweeping changes if Deutsche was to survive. The appointment of a new CEO, Christian Sowing, in 2018, marked a turning point. Sowing advocated for returning to Deutsche Bank's conservative roots and proposed cutting back the investment division by a significant margin, reducing the workforce by 20% in the process. U.S. investors finally took notice of Deutsche Bank, but not for the desired reasons. The bank's notorious Moscow branch had been used for money laundering by Russian oligarchs seeking a discreet channel. By 2014, government authorities caught wind of the operation dubbed the laundromat, and the scandal erupted in the media by 2017. Deutsche Bank's ongoing controversial relationship with U.S. President Donald Trump further embroiled the institution. As the new era of restructuring unfolded, the reckoning had arrived at Deutsche Bank's doorstep, leaving its future hanging in the balance. Trump's curious ties to Deutsche Bank. A $40 million favor by Deutsche Bank in 2010 marked the beginning of a long and unusual relationship with Donald Trump, whose personal debt to the bank placed it in a risky situation when he became the U.S. president. The assistance from Deutsche Bank not only involved millions in loans but also implied credibility, which Trump capitalized on throughout his electoral campaign. While Deutsche executives regretted the loans, they ultimately found that the bank's outdated technology, compartmentalized departments, and the corrupting influence of American power contributed to their predicament. In 2010, Deutsche Bank made a notable decision, relieving Donald Trump of a $40 million debt. This generous offer sparked a peculiar relationship between Trump and the bank, one that would significantly influence Trump's political success. When Trump didn't have enough money to repay a hefty debt, his son-in-law Jared Kushner introduced him to his personal banker, Rosemary Vrablic of Deutsche Bank. Vrablic, known for bringing high-profile clients to the bank, quickly approved a $50 million loan to Trump from Deutsche's private bank. Although this action was unconventional, their partnership would take even stranger turns. The support from Deutsche Bank was crucial in shaping Trump's career, and millions in loans aided his journey to the presidency. The bank backed Trump's purchases of a Miami golf course and the leasing of a historic Washington, D.C. building, which later turned into Trump International Luxury Hotel. In exchange for their loyalty, Deutsche Bank offered low interest rates and extended loans and credit lines to Trump's family. During the 2015 presidential campaign, Deutsche Bank's financial backing proved significant for Trump, allowing him to counter accusations that he was a pariah in the financial world. Trump strategically flaunted his connection with the bank and directed reporters to Vrablic, whom he falsely claimed was Deutsche Bank's CEO. In the aftermath of Trump's election, Deutsche Bank executives scrambled to comprehend the magnitude of their loans now held by the president-elect. Attributing the mistake to their outdated systems and the corrupting influence of American power, the bank faced a dilemma. The U.S. president owed them millions of dollars, which meant that if he defaulted, the bank would either have to seize his assets or essentially make a huge, personal donation. Regardless of their decision, neither option would paint Deutsche Bank in a favorable light. Uncovering Deutsche Bank's dark secrets. The sudden and unexpected death of Bill Broeksmit, an executive at Deutsche Bank, led his stepson Valentin Broeksmit on a journey to understand why his father took his own life. What he discovered in the process was an extensive cache of internal documents, illuminating the bank's unethical practices and the factors that drove Bill to the brink. The revelation of these documents brought public attention to the troubled bank and exposed its long-held secrets. Bill Broeksmit's stepson, Valentin, faced a tumultuous life before finding himself in the middle of one of the most shocking financial scandals of our time. After spending years in foster care, Val was adopted by Bill, who provided for him throughout his young adult life. Following Bill's suicide, Val became determined to uncover the reason for his father's tragic decision. Val's investigation began with accessing his father's laptop, where he discovered a trove of passwords and sensitive work-related emails. This digital archive ultimately revealed the nefarious exploits of Deutsche Bank, as well as secrets about Bill's deteriorating mental health. As Val continued to pursue the truth, he enlisted the help of David Enrich, a Wall Street Journal reporter. Together, they found a damning document accusing the bank of poor business practices, a revelation that significantly damaged Deutsche Bank's stock value. During this time, Val also discovered evidence that linked Bill's dark fate to his stressful work. This included letters from Bill's doctors, which depicted his intense anxiety as a result of the ongoing investigations. Moreover, Val uncovered evidence that Deutsche Bank lawyers had redacted and rewritten the doctor's notes before releasing them to the public. It appeared that Bill had absorbed the weight of the bank's issues on his shoulders, eventually succumbing to the overwhelming pressure. Years later, Val would come into contact with Adam Schiff, the chairman of the Intelligence Committee investigating Russia's involvement in the 2016 U.S. presidential election. At this point, Val fully recognized the value of the documents he possessed, and Schiff had to issue a subpoena to obtain them for the investigation. The extensive internal documents that Val discovered not only provided insight into Bill Broeksmit's tragic end, but also exposed the corrupt practices and deteriorating moral fabric of Deutsche Bank. The financial institution, with its long history of criminality and reckless operations, had spiraled into a self-destructive downfall.
From its involvement with the Nazis to its adoption of the Anglo-American approach to banking, Deutsche Bank's history is fraught with unscrupulous dealings and corruption. Its association with Donald Trump was especially controversial as it made a mutually beneficial, yet inevitably precarious, business alliance. Even when Deutsche Bank found itself in an abyss of international issues and the Great Recession, its leadership couldn't adapt to avoid disaster. The downfall of Deutsche Bank can be traced to its continuous disregard for ethical and responsible decision-making. The tragic suicide of Bill Broeksmit represents the inevitable internal strife, resulting from a culture focused solely on profit margins, and Deutsche Bank's tainted legacy exemplifies what can happen when corporations abandon ethics and accountability.